has been an interesting week, to say the least, for free enterprise and organizations, because banks are once more in the center of attention. You might have heard we have another case of, well, we don't know yet, regulatory compliance, offensive laws. However, banks are again failing. And in this case, we had the cases of Signature Bank and SVB, the Silicon Valley Bank, banks who are not able to cope with the interest rate. That's at least what they say right now. And once more, states jumped in, countries jumped in, taxpayers' money was used to save banks. And the question is, when we talk about either revision, compliance, or laws, do we need more regulation in organizations? Because that question immediately comes to mind as soon as people hear about such issues. So let's look at the problem. So first, we see that banks are crashing again. However, they were quickly saved. So the money is saved. People will get their money back. At least that's what we know right now. Let's hope this will stay like that. Signature Bank and Silicon Valley Bank, the state again saves these banks. And it's not only the US in this case. Credit Suisse, the Swiss bank, was offered 50 billion Swiss franc because they needed liquidity. And the state of Switzerland jumped in because basically Credit Suisse is one of the most known and well-known banks. It is one of these banks where Switzerland does not want them to fail, I'm pretty sure. But there are many questions now about regulatory and compliance, and these questions go pretty far. So, for example, when you hear about the fact that the SVB CEO, so the Silicon Valley Bank CEO, lobbied for the relaxation of the Dodd-Frank rules. If you don't know what the Dodd-Frank rules are, that's perfectly fine, because I didn't know either. So when you do the research on that, the Dodd-Frank rules are the rules against predatory lending. Predatory lending was a practice that was, basically common practice in banking before 2008 and the collapse of other banks, which we get to in a minute. And it was pretty profitable for banks until the whole system collapsed, because predatory lending means you give money to people who either can't afford it in the first place, or they can only afford it until the fixed interest rate stops, and then it becomes too expensive and they start to miss rates and miss payments, installments. And especially in the US, very quickly, the bank can reclaim the house, which is massively profitable for the bank, because first, you make money on giving people a loan with agio, disagio, etc. So there are certain fees you charge even for just getting the loan started. Second, then you get the interest. Third, you get the installments paid back. And when they fail, you get the house back. And normally when people move in somewhere, they have a pretty nice house, which is well constructed, in a good shape, because they live there. You chuck people out and you have a high value house. Of course, when every single loan collapses, it is not worth that much anymore, because when you have whole neighborhoods being devastated, no one wants to move there anymore. So you might have a nice house, but this is going to fall apart pretty quickly because no one takes care of it and no one is going to move in. And when you think that this is bad, that an SVB, the Silicon Valley Bank CEO, lobbied for the relaxation of the rules against predatory lending, when you think that this is bad, when you think this is a flat learning curve, buckle up. That is not the tip of the iceberg. Or that is not the worst thing you can hear, because you probably might think now, well, when there are these banks and they fail, there must be a CFO, a chief financial officer on the board. Correct. And there was a CFO at Silicon Valley Bank as well. And obviously he didn't do the job too well. And we now have to see, who is this person? So where was the Silicon Valley Bank CFO before he worked for Silicon Valley Bank? And here we go. He was the CFO of Lehman Brothers, a bank that failed in 2008. And when you now think no one can make this up, and I fully agree with you, no one can make this up. And the question is, do we need more regulatory and compliance? Do we need more regulatory and compliance, more laws in place? And let's look into how to do things better. So just to get it very clear in the first place, we need certain rules in place. When you are one of the people who say only free markets work, not only are you making a complete fool out of yourself, and I just want to tell you my own bias here. I'm a self-employed entrepreneur. I am probably the most in favor person of a low regulation, low taxation state. However, having no rules in place and just allowing anyone to do whatever they want to do only leads to the most powerful people becoming more powerful, and always women and minorities get basically torn apart and put down. So the right of the strongest person, just saying, if you're strong, you do whatever you want. If you're weak, you're not. That's not how any society can sustain we need some regulation in place. And if you don't agree with that, you can end the podcast right now, right here, because then you're obviously not impressed by any proof, facts, science, or evidence. Then you are simply a person who should not be in charge of anything, because you're not only not the sharpest tool in the shed, not the brightest candle on the cake, you're plain mad. Plain mad as probably Jim Cramer is, the guy who does Mad Money and is on CNBC for no particular reason anymore. Not only did he make countless wrong ideas or recommendations, or however you want to call it, because they always say it's not financial advice to not be liable. He's ranting around Mad Money because the person is straightforward mad. When you look at Jim Cramer, this is how a financial advisor looks like after you just downed 10 cans of Red Bull and probably a bathtub of coffee, not even talking about other substances. And he said that Silicon Valley Bank and SVB, the Silicon Valley Bank and Signature Bank were good recommendations just recently. Well, another great piece, Mr. Cramer. You failed once more. I have no idea why they keep him on air. Probably as a network that keeps him in on this TV station. It is as mad as his show is. So we already said now we need regulation. It is not sustainable for any society to say the strongest person just does whatever they want, because that never works. However, when we talk about compliance and we have certain guidelines, every guideline needs context. And I give you a very simple example. Let's say you run a business and your business has customers, clients. Yeah? Might happen that some businesses have clients. And you now decide that you want to invite a decision maker to a sports event, whatever sports event that is, football, basketball, ice hockey, volleyball, whatever it is, you want to invite someone. You know, these business seats you have in every single sports arena where, by the way, the football clubs make the most amount of money from. So VIP lounge, whatever it is. And here it is where you need context. If you would simply, for example, say amount XYZ is allowed, anything below is okay, anything on top of that, not. That is not something that helps. I just give you an example. Let's say you are a SME, you produce engines, so you're an engineering company, mid-sized company, and you invite one of your clients and you invite the head of purchasing because you want to talk about business in a private setting at a sports event, have a good time, have fun, and probably hope you get some business out of it. That is clearly the idea. So probably the ticket to the sports event, depending on the country you're in, might cost $200, $300, $400, $500, pound, euro, you name it, they buy it. So you have to only ask yourself one question in the first place. And the question is, could this person afford that by themselves? Because if they could, it is highly unlikely that they will be severely influenced by simply having a good time with you at a football, basketball, ice hockey, whatever stadium. However, if you say we don't invite them to a sports event, we get to their place, then we take a limousine to the airport with them. There's a private jet, they fly across the country, and then we go to a sports event there. So the whole thing costs about $100,000, which is probably close to their annual salary in certain countries as a head of purchasing, for example, in Germany, unfortunately, sometimes. Then, of course, it would be a massive influence. So there is a name for that factor, and it's called the so-called social equivalent. The social equivalent means, is this person able to afford that by themselves? If the answer is yes, there's no problem. If the answer is no, then there is a problem. Just setting one guideline and saying everything up to $500 is okay doesn't make any sense. If you take someone from, let's say, the production plant, from the workers, they would be massively influenced by $500 probably because they couldn't afford any of these sports events. So you always need context. And I know what some people will now claim. They say, oh, it's too complicated. We just want to have one rule that makes it easy. And there is one line I'm going to repeat constantly in my podcast. There is never an easy solution to a complex situation. If anyone claims there's a simple solution, this person is either lying or they're trying to sell you a product, which they can simply sell to you, you pay it, and then they coast off with the money, and that was it. So there is never a simple solution in a complex setting. So you need, for compliance reasons, you need a guideline which always has context. Always look at, and that's factor number one for today, the social equivalent. Number two, if you, for example, have internal revision, and I know often people are not very popular who work there. And by the way, they don't need to be. because that's not their job. Their job is not to be popular. Their job is to check if everything's going right. And if not, to tell you that you have to fix it. That is exactly their job. However, in some companies, people work there for a long time and they know people from the internal revision department or whatever you want to call this department. And there's a so-called buddy syndrome. And the buddy syndrome means, and that is the second aspect we have here, the buddy syndrome means that people say, well, this is not going right here. Look at this and this and this, but, I'm not going to make a big deal out of that. I'm not going to put it in the report. We know each other for a long time. You know me, I know you. Just fix it until next year. It's going to be fine then. I'm not going to put it anywhere in writing. And that is where the problem starts. The buddy syndrome says that suddenly you accept wrongdoing based on a handshake where someone tells you, yeah, I'm going to fix it. And most likely they will not, because maybe they know that they can get away with it. Or they probably already think, maybe I'm not here next year, so I don't care about the error or the wrongdoing. I just will leave the company in a couple of months. So that is the second aspect. Look at, is there any buddy syndrome in your company? If so, you have to fix it, which quite often means that you have to either professionally train people who are doing your internal revision, or you have to just lay them off and exchange them. It doesn't mean that you have to lay them off completely. Maybe there's another role for them. But when people know each other too well, then there is no point in thinking that there is no, let's say, personal favor involved. You are not having a go against your colleague who you know for 30 years because you're sitting in the same boat. And one thing you don't want to do is you don't want to rock the boat. If we now look into regulatory goes far into what happens in an organization. Often it is a law. If you offend the law, there's a fine, for example, a financial fine or even personal liability, can end up with you being in jail if it goes really bad. Now you have to look into one aspect. Look in your organization and look at a certain person and always wonder, especially on very important positions, as soon as people know that when they do something wrong, you cannot replace them anyway because they are too important. That is where the problem begins. Of course, depending on their stress and resilience factor, some people are either able to pull wrongdoing off or not. And of course, they shouldn't, but some people do. The third aspect today is, so first aspect is social equivalence, second, the buddy syndrome. And the third one is, look at any place where someone cannot be easily replaced. And by the way, the message here is not everyone has to be replaceable and you can chuck them out at any point in time. That is not the message. However, when people know, and that is crystal clear, when people know that nothing happens when they do something wrong, you will always help them. And depending on their stress and resilience factor and how well they can handle stress, they're going to pull it off with no consequences. They will commit wrongdoing as long as it is to their personal favor and they can get away with it at zero consequences. Why? Because it pays off. And of course, some people would not do that, but let's face it, and that is a very important question. There's an excellent course from Harvard University about ethics. And the leading question where the lecture starts with, and the professor asked the people in the room, if you could be 100% sure that no one is going to follow up with it, would you still pay your tax? And the vast majority in the room says either no, or they would pay way less. And that's exactly what I mean. As soon as people know whatever happens, nothing will happen to them, they always receive help because they're so important. And depending on their stress and resilience factors, they can just pull it off and move on like nothing ever happened. That is where the third factor comes in. And that is the factor of deliberate wrongdoing because people think or know they are non-replaceable. And now there are a couple of questions. After we have these three factors we just mentioned, there are a couple of questions, 5 in total, you should ask yourself. So number one, because now, of course, you sit there and think, how do I find out all this in my organization? Go through a couple of questions. Question number one, which positions in your organization or your department carry the highest amount of risk? So where is the highest amount of risk located? Question number two, always look at, do you have a network active or some sort of insider deal going on? And the difference is massive. A network is valuable. Certain people get certain gigs or certain jobs because they know someone, but they know someone because they did a great job, and it can be proven by facts, evidence, and science, not by I know and like someone. Facts, evidence, and science. You can prove by facts that this person is a great pick for the job. That is a network. Any kind of insider deal any kind of nepotism or cronyism you have in your organization, that is where massive problems begin, because people will stick to each other and support each other up to the level of utter incompetence, and they are on positions where they should never be. So question number 2, look at your organization, say, where do we have networks? Networks are fine. Where do we have nepotism, cronyism, insider deals going on? There you need to show consequences, and I mean staffing consequences, because otherwise you will never get rid of the people promoting each other and protecting each other. Question number 3, do you have any part in your organization where you say, oh, this grew historically, or this grew organically, which basically is a euphemism for saying, we know it's not great, we basically need to change it. We definitely need to change it, but no one's doing it. So question number 3 is, do you have any part where you say, we're not doing well, but no one ever changed it because we just like it the way it is, because that senior manager founded the company or is best friends with the co-founder? Look at these aspects, change them as quick as you can, because normally in these aspects, you find lots of errors, lots of issues that you can fix before they escalate. Question number 4, how often did you hear the phrase, oh, we always wanted to do something there? So someone says, project XYZ, or let's say process XYZ is not very efficient and has lots of errors in there. And then people say, oh yeah, we always wanted to deal with that, but no one ever did. And you always have an excuse. So much to do, stressful week, someone changed companies, we had to hire someone, we had to onboard someone, blah, 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 blah. There is always an excuse why you do not do something. Look at your organization, look at your department, and wonder, where is the aspect where you say, we always wanted to do this. You know what? Now it's time to do it. And the 5th question is the most important one. Look at your organization or your department and ask yourself, how much arbitrary action happens in your department or your organization? Arbitrary means that someone just says, we do it because someone wants it, and there's no proof, science, evidence, that there is no logic to the action. And the more arbitrary you act, the more errors you will have and the more bad process you will have in place. Of course, the larger you are as an organization, the more complex it is to find out where do you have the arbitrary action. But it is worth looking into it. It's a one-time effort, which you should do, let's say, at least once a year. A one-time effort per year is worth that you do not have anything escalating where you thought, oh, we didn't know that one. How could we get that far? How could we get to the point of not knowing? Well, because you never looked. Look into your organization, where are the arbitrary actions, and then make them logical actions, always based on science, proof, and evidence. To wrap this up, how can we do better when it comes to regulatory and compliance? So always, and that's the guideline, freedom is okay where it's necessary and possible. However, and that is aspect number 2. So number 1, freedom and letting people do what they want is always the first option where it is necessary and possible. Number 2, we need rules and regulations. That means compliance, regulatory, however you want to call it. We need rules where the risk can either affect the organization or, even worse, other people inside or outside the organization by wrongdoing. So, for example, when your clients could get harmed, or maybe even people who are out there in society who don't have anything to do with you, but suddenly they are affected by your actions, then you need regulatory and compliance. So anything that can harm your organization, the people inside there, or even people inside or outside the organization or society as a whole, you need regulatory and compliance. And the third aspect here is very important. Your control units are not there to be nice and popular, which means you have to check people's personality. When you hire someone for a team that has to do regulatory and compliance checks, are these people able to be the unpopular person in the room and get things done, even against people's will when it has to be done? You do not find many people who are able to do that, because you're working in an organization, probably the only colleagues talking to you are the other people in your department. So look at your control unit, however you want to call it, compliance, revision, regulatory checking, however you want to call it. Look at the people and check their personality. If you already have a team in place and you realize their personality is not a good fit, it's just a buddy system we have in place, you maybe do not need to lay them off. Maybe there's another job in your organization which you can offer to them. However, if there's no other job, then it's time to say goodbye and get people in who are actually up to do the job. Because as soon as you have this in place, freedom where it's possible, rules where they need protection, and then having people to check regularly that no wrongdoing happens on any other or arbitrary level, that is where your organization is going to be a better one, a more productive one, and a safer one for you and anyone else. And of course, I published on this, but first I have to say thank you once again, actually. The podcast we have, again, made it into very high rankings. We are top 30 in the Netherlands. We are top 20 in Switzerland. For the first time, we are in the top 100 in Italy, high ranks in Austria as well. So thank you very much to all of you for listening to this. Fourth year we're in now, and it's all based on content. There's no paid advertising. So thank you very much for listening. Thank you very much for referring it to others. Thank you very much to just spending the time here with me every single week. And by the way, if you like it, please go to Spotify or Apple Podcasts and give it a 5-star rating. That helps other people to hear the same podcast. This Saturday on my social media, meaning LinkedIn personal profile and business profile, as well as Facebook and Instagram, I published the rankings so you can see them there. Thank you very much for that. If you now say, hey, this regulatory topic is really complex, I have a couple of issues. Can we talk? Yes, we can. So just send me an email, nb@nb-networks.com, and then we take it from there. Then we can either chat via email or have a meeting. Doesn't cost you a penny, and we take it from there. If you say, hey, I got something very specific for my company, I need someone to deliver workshops, trainings, speaking, coaching, whatever else, let me know. I'm available for that as well. Happy to hear from you. I'm very important as well, and that is the second step I always recommend, is go to expert.nb-networks.com, register your email address in there for one reason, and the reason is very simple. Every week I receive emails where people say, I found this article, can I have it anywhere for free, because they have a paywall. You can get any single article I ever published for free, but only via the leadership letter. When you go to expert.nb-networks.com, every Wednesday morning, you receive exactly one email. It's 100% content, ad-free guarantee. But that's the only way how you get free access. There is no other way, because I cannot work for a magazine. They want to make money on the article and then give it to you for free. Go to expert.nb-networks.com, register your email there. It's just one email per week on a Wednesday morning. It's 100% content and a guaranteed, and an ad-free guarantee is included. But the third step is the most important one. And the third step means apply what you heard in this podcast. Because only when you apply what you heard here in this podcast, you will see the positive change that you would like to have in your organization. I wish you all the best implementing these steps in your organization. I'm always happy, and I'm here to help. Just drop me an email and we take it from there. And at the end of this podcast, there's only one thing left for me to say. Thank you very much for your time.